And today's guest lived the shift from analog to digital, led multi-billion rand South African ICT portfolios, and is now helping rewire fintech and edutech across Africa. If you care about values that create velocity and AI that actually earns its place on P&L, this one is for you. Welcome to Beyond the Board, the show where we dive into the minds of founders and operators shaping Africa's future. I am Ala Umar, and today's guest is Troy Hector, CEO of Trident Digital Enterprises. Troy helped steer stakeholders' engagement during the 2010 FIFA World Cup, and today is building world-class fintech and edutech solutions guided by Trident's noble values: nurture, observe, believe, lead, and empower. We're going to unpack the story behind Trident's the shifting Africa Gulf fintech space, and how AI and automation can quickly unlock speed, trust, and measurable value. Troy, it's great having you here. Welcome to Beyond the Board.
Thank you very much. I'm honored and delighted to be joining your session this morning. Looking forward to the dialogue, and you've raised some very interesting discussions very close to my heart, both from academic and a commercial standpoint, and look forward to the discussion in the next hour or so. So thank you for the opportunity.
Great to hear. Thank you, Troy. From our last conversation, I promised that I'll start with the story behind the name, Trident. What did it symbolize for you at the very beginning? And when did you know it was the right banner to build under?
Interesting question. So thank you for that. After spending more than 2 decades in the corporate world, in 2016, 2017, I took a bit of a sabbatical, mainly to pursue some academic interests and with one primary goal to attain my PhD, which I'm still busy with at the moment. But that being said, I ventured into the entrepreneurial space and decided to set up a business called Trident Digital Enterprises. We registered the business in May 2017, and we didn't do any commercial trading for the first 5 years of the business. We only came to market in early 2022, just after the COVID period. In 2025, we now have 2 of the 3 legs of the business operating at this point. The name Trident, I would associate with the trident spear of Odysseus in Greek mythology. So it was sort of the 3-pronged approach, if one could relate to that. There was a lot of tech opportunities that we wanted to consider, but we wanted to have a portfolio of services that were complementary to each other. In the edutech space, we've integrated our FinTech offering because there's a payments requirement. Likewise, we'll do the same in the sport tech element, which also requires a payments element as a whole. So we selected the 3 lines of business to be complementary and be creative in the way we offer services to the marketplace. In fact, it was the reason why we'd associate the name Trident. Many people tend to associate it with Greek mythology, even though my name is Troy Hector and I've got no Greek blood in me whatsoever. It's purely a coincidence. But it's called Trident and Troy Hector being my real names at this point in time. But that's the background to Trident at this point. As I said, it's a total digital startup. I've bootstrapped the business up to now. We've got 2 of the 3 legs in operation, with the 3rd leg, the sport tech leg, going live sometime early next year, 2026. That's a brief overview.
From managing multi-billion rand portfolios in ICT to building an agile disruptor at Trident, what stayed constant with your leadership DNA? And what did you intentionally change?
So the corporate world, which I'm eternally grateful for, has taught me a lot about governance and responsibilities in managing a very large portfolio. So whether it's managing people, whether it's managing the strategy, whether it's managing the finances of the organization, I was pretty well grounded in that particular sphere, which was very useful in setting up a startup such as Trident Digital Enterprises. Even though it's a much smaller entity, the principles of running the business still remain the same. So you need to ensure that you manage your income, manage your expenses, make sure that you deliver customer service, that you become creative in the marketplace as a whole. Those fundamentals from the corporate world certainly stood me in good stead in moving across. In terms of the changes, unlike in a corporate world, which is governed by bureaucracy, and for a very good reason. It's meant to be that way to ensure that the shareholders, stakeholders of the business are protected and complying with various legislation and regulations in the marketplace. There's a lot more flexibility in the entrepreneurial space. As being the owner and leader of the business, you can take decisions on the fly if it makes business sense. Sometimes you get it right, sometimes you get it wrong, but that is part of the learning experience that one does go through in being in the entrepreneurial space. But the corporate grounding is certainly a very, very valuable source of knowledge, wisdom, some insights that can be taken forward into the entrepreneurial space. Sometimes, as a small entrepreneur, you are dealing with larger corporate entities in the marketplace. And of course, that previous corporate experience then comes into hand very, very well when you're dealing with large entities, particularly when you're dealing with C-suite decision makers in large businesses. Of course, we would like to be a lot more nimble, a lot more flexible into the entrepreneurial space, but typically we would want to respond to the market needs as quickly as possible, but not just for the sake of it being fashionable. It has to be informed by a sound business decision, it has to be informed by sound numbers and data points, and also making sure that we can deliver value to the business going forward. Yes, it is our intention to be disruptive, innovative, and deliver value to our customers, where traditional organizations typically may not offer that as a value add.
And your vision, Troy, says prosperity through digital contact and interaction. That's a very strong vision, and that's exactly the way things are moving now. Bring that to ground level. What does prosper look like for, say, a bank improving onboard, a teleco expanding digital channels, or university adopting edutech?
So that's a very interesting question. Technology in terms of humanity has always played a very significant role. It's mainly about improving the quality of life of individuals, communities, business, and society as a whole. Whether you're talking about the first industrial revolution, which started with the agri-tech or the agricultural community, then moving to the steam environment, which is the second industrial revolution, then the third industrial revolution was when computers came into being. Now we're talking about the fourth industrial revolution as a whole. So there are these plethora of technologies and innovations out there. We'll be talking about artificial intelligence, quantum computing, Internet of Things, mobile connectivity, etc. The question is, entrepreneurship is not really about designing those technologies, but how one can package those technologies to improve livelihoods of people ultimately. Our focus really in terms of our vision really is to see how we can empower ordinary citizens, not necessarily the big commercial enterprises, but the small startup enterprises, what we call MSMEs, so the micro, small, medium type enterprise. So you start with micro, then go to small, then go to medium, and potentially then become an IPO listed company there afterwards as well. But it's that sort of vision that we currently have in mind in terms of how we empower small businesses, but also communities as a whole. And of course, technology can play and does play a fundamental role in that process, moving away from the paper system to utilizing digital technologies, in harnessing mobile platforms to include financial inclusion and making sure that you can transact utilizing a mobile wallet, and effectively harnessing things like cryptocurrencies, stable coins, blockchain type platforms, making it more effective for consumers and businesses ultimately going forward. So that in essence gives the broader context to the vision in terms of utilizing digital processes and tools. If one is to simplify it, really is click to do business, right? And instead of going through myriad of processes and filling in paperwork and doing signatures and getting affidavits, rely on the technology. It is pretty stable, and effectively making that available to users ultimately. As a context, is embedded in our edutech and our fintech offerings at this particular point in time. And also, I think, during the COVID period, the 21, 22 type period, we had a lot of time to think and structure our business approach. So in the case of the edutech market, when children, teachers were sitting at home, in some cases, there were some that were very fortunate to get access to an internet with a computer and Wi-Fi. There were many, certainly in the South African context, that were unfortunately not eligible or could not afford to get access to learning. They, in some cases, lost out a whole year, if not 2 years of learning through that process. Even though we've got this very, very bold vision, we're not suggesting that we are the panacea to all these challenges, but the opportunity to harness these digital tools in the education space, in the financial services space, and in future in the sport entertainment space is certainly driving our growth and investment at this point. So digital is a very core component of our ethos in terms of the way we conduct and run our business at this point.
And in terms of inclusion and reaching out those who may not have the literacy on engaging with technology, what is Trident working on to ensure that when deploying applications or working through or edutech platform is accessible to all?
Yeah, that is a very important point. I come from an engineering background, even though most of my professional career was in sales and marketing. And one of the critiques of engineers, they typically tend to over-engineer things to impress their supervisor or colleagues. But from a consumer customer point of view, it doesn't serve a purpose as well. Less than 20% of the features on the machine itself was actually utilized at the end of the day as well. We just want to simplify it and get people to utilize it properly so they can effectively enjoy the product and do what they need to do on a day-to-day basis at this point. To your question, what we have done, and we're hoping that we are doing correctly, is to make the offerings as intuitive as possible. When you log on to the home page or go onto the platform, the instructions to move from one page to the other, or even to do a language translation, or even to download a device or get somebody to read the audio version back to you, is as intuitive as possible at this stage. And I think that has been achieved up to a point. Can we improve on that? Certainly, we do have artificial intelligence that is part of our development roadmap. And I can share with you that by the end of this calendar year, 2025, we'll be launching our first artificial intelligence tutor facility in South Africa. Once we get that up and running, we can expand it to the broader African continent. But in essence, we've always had this vision of utilizing our edutech platform specifically for connecting a very well qualified, maybe retired teacher with a student that may be leading additional lessons, say, on maths or on science or on biology, as an example. The challenge was to find qualified people and stand behind those individuals, which was one of the challenges that we had in the marketplace in South Africa. But now we've overcome that in the sense that we can now digitize that entire process and give you an avatar that effectively speaks to you, learns your learning challenges, perhaps even your strengths, and then customize the content to speak with you and speak to you to ensure that you can improve at a particular subject level and even your comprehension level. That's what we are introducing into our portfolio at this stage. We couldn't sort of leapfrog into it right now. We first had to lay a foundation, which we have done. So we have got what we call static content you can read off the screen. But going forward, you'll now be able to chat with the content, engage with the content, and perhaps even, to the point, please give me references or perhaps explain this in more detail, or perhaps in a particular context, provide some further details. That is the engagement we're trying to offer. 2-3 years down the line, we do want to embed virtual reality and augmented reality into the context. So apart from reading static text on the screen, you could actually visualize that ultimately going forward and actually engage with the content through a digital stylus and effectively then learn from that process going forward. And there's some brilliant tools like that available. We'll introduce that into your course right now. So the first step was the static content, which is available right now. The next phase is to launch this AI tutor, which has been a little pet project of mine now for quite some time. And in 2-3 years down the line is to have personalized avatars, personalized teachers that effectively will be sort of working with the student through his or her academic career, primary school, secondary school, perhaps even two. And that's the whole thinking we currently have in terms of our edutech space. We've developed what we call the 5C framework. The first C is the content, the digital content and resources. The second C is the classroom management system for the operations of a school institution. The third C is cloud-based. The fourth C is connectivity, the fiber, Wi-Fi to the campus of the school. And the fifth C is really the consumable. What device, what element do you use for the learner to actually get access to the content as well? And that effectively just informs our current sort of thinking in the edutech space, all digitally based at this point in time, and effectively trying to harness the available 4IR technologies that are out there today to assist the student with their learning development.
That's very exciting. I have 4 questions, but I'll only take 2, right? Because this interests me very much. When we look at integrating something such as what you've mentioned, of avatars, and you could engage verbally with the AI, there might be a gap in terms of people understanding how to utilize the technology. How is that gap being addressed, and who are you approaching first?
That is perhaps relevant in a very global context where the literacy levels may not always be sufficient in terms of what you place on the screen and instruction you give to a particular user. There are various ways that one can overcome those challenges. One is through a process called gamification, where effectively you encourage the user to respond to a particular query or request. And effectively, if they do get it right, you effectively give them a little star, a little badge to say, well done, you've done wonderfully well on that. And depending how the user progresses through the process, there are certain levels or certain tiers to effectively reward the individual, for the progress they're making through particular curriculum or process going forward. And that effectively is a very, very foundational sort of aspect on tutoring in a digital context, where if people don't understand the full complexity of the materials or the service you provide, utilizing tools like gamification is one aspect you can use going forward. The second aspect is to utilize online video material, video tutoring. So what the student can do is listen to the lecturer or the teacher, communicate that through to them. And, because of tools like Google Translate, the de facto language may be English, but you can translate that into literally 100 different languages globally at this point in time. So if English is not your mother tongue, you can say, convert it, let's say, to Hindi, for example, and effectively the tutor will then speak to Hindi for the student to understand. And that effectively are ways that we are trying to better. Is it perfect? Probably not at all at this point in time. There's still areas of improvement because one needs to cater for both, the developed world and the developing type world. And sometimes, in the African context, the native African languages are not always accommodated in those platforms as a whole, and therefore the default has to be in English. By comparison, in the European market, you probably will not have that challenge, but in the African markets, you typically will have that challenge when it comes to native speakerism at this point in time. So utilizing tools like video materials, even short YouTube video clippings, utilizing things like gamification. And once the student has advanced beyond those levels and gets comfortable with it, they can then go to the standard offering that's available and then perhaps even engage with the text. Once you've gone through a piece of text, maybe do a short quiz, assignment. Artificial intelligence will then respond to that and say, well done. I think artificial intelligence will play a very critical role in utilizing those tools going forward. Of course, we're making a very bold assumption that there is a minimum level of literacy and comprehension, that the student does have while utilizing these tools. If it is a case beyond that, where somebody hasn't picked up a book or hasn't learned to read, that becomes a very different discussion. But there are tools out there that can assist those users in the marketplace, probably better than going through a formal classroom situation. These tools are typically available to assist those students going forward. But in the offering that we're providing at the moment, there is the assumption that there is a very standard understanding, numeracy, literacy effectively before you can actually consume the tools in the marketplace at this stage.
That's very exciting. And you are ahead of the game, Troy, because a few days later, I was looking at data, and that data was talking about these jobs that we might see disappearing in the next 10 years. And teaching was on the top 5. You've already started integrating such technology. It makes it very exciting. And I hope I get the opportunity to interact and see how they work in the near future. You've got a position across Africa with keen eye on golf. What are the most meaningful differences and the surprising similarities between these ecosystems right now, the GCC and Africa, in the space of fintech? Yeah.
Market last year in September, I had the opportunity to attend a FinTech conference, specifically in Riyadh in Saudi Arabia. What I said in a panel discussion and worked and engage with some interesting experts in fintech field, both from a regulatory technology and also from a Gulf point of view as well. In fact, just coincidentally, I had the privilege of engaging with the chairman of the Central Banking Authority in Saudi Arabia and the central bank digital currency, which is the topic of my academic research for my master's and PhD. We realized that there was a similar understanding of how this should be deployed fundamentally going forward. And we just had a very quick informal dialogue associated with that. In terms of the similarities, I can share that there is a very, very clear understanding that to drive financial inclusion, where people have got access to finance apart from the traditional financial institutions like banks, commercial banks, etc., that there's a very, very strong drive both in Africa as well as in the GCC to give people access to alternative payment technologies or mobile platforms. It is very critical, as it's generally understood that traditional finance does not really embrace financial inclusion to the full extent, and mainly because of the bureaucratic standards or policies that effectively exclude a lot of those people out of the marketplace and so on. And this is where fintech has come to the fore to say that there is an opportunity to service those particular market if we just relax our sort of lending criteria, perhaps utilize a very different set of criteria, and perhaps even look at various ways that we could utilize technology to offer these services to the marketplace going forward. So that was apparent through my visit to Saudi at this point in time, as well as also given conversations I've had with various other fintech players on the African context. That effectively is what we're looking at right now. And one of the differences in the markets, not just between Africa and the GCC, but even in country, is that everybody is pursuing a very different fintech regulatory framework. So from a regulatory point of view, from a legislation point of view, there's not really harmonization at this point in time. For example, in comparison to the European Union, where they just recently introduced the MiCA Act that I think covers 25, 26 countries in a part of the world. So there's a standard sort of approach to the way fintech and cryptocurrencies and stablecoins are dealt with. That is not in place as yet, specifically in both the African and as well as the GCC context, although discussions are being held to try and harmonize that standard across those countries and regions at this particular point. Which brings me to the topic of CBDC, part of my academic research. More than 100 countries globally are doing experiments and proof of concepts in the space of central bank digital currencies. This, for reference, is just a central banking authority like the Fed, like in South Africa, the South African Reserve Bank, utilizing digital currencies to effectively transact both locally as well as also cross-border at this stage. One of the challenges that we see is that there's no common standard moving from one country to another at this point. So even though fintech does provide huge amounts of opportunity and growth in the marketplace, the compliance element under the standard financial regulatory regime needs to be put in place. So standards typically are not uniform or harmonized across the world right now. In comparison, if you utilize something like a Bitcoin, which is not regulated by any financial authority at this point in time, you don't have that particular problem as we speak right now. So there's both the traditional world combined with the cryptocurrency world as one aspect, and the cryptocurrency world on its own, that has its own set of unique benefits and features that effectively from 2008 was introduced and made finance become very disruptive and effectively has introduced a whole new level of opportunities in the marketplace. We're seeing those developments taking place both in the African context as well as also the GCC context at this point in time. And I think going forward, it's probably just a matter of time. There will be some integration, harmonization, because of course we live in a global free economy, or in most cases, a free economy. Trade finance is critically important, and we need to ensure that we have those mechanisms in place, unlike the traditional SWIFT network, which facilitates those transactions. Right now, we need to embrace things like cryptocurrencies, stablecoins, and Ethereum blockchain type platforms going forward as well.
Even just taking it back a little bit to Africa, like there's still issues when it comes to cross-border transfers. And speaking with few leaders in the fintech space, they would this always comes into the discussion. Is there actions or a serious discussion taking place to resolve this and allow that transfer across Africa?
Yes, there is. To answer it very, very simply, but there are challenges, and perhaps let me just qualify what I mean by that right now. Let's just try and structure the problem in the following manner. So right now, cross-border payments and even what is called international remittances, back to your home country, those do take place, but two problems with that. One, it is very expensive to transfer money from one jurisdiction into the other. And secondly, there is the element of time, which typically could take a few days literally before the beneficiary receives those funds. From research that we had access to, shall I say, it could cost up to about 8-9% of the transaction value to transfer money from the UK to an African country that we measured just at the end of 2020 at this point. And that, of course, is money that effectively is taken off the table of the beneficiary, money for food, for groceries, and that sort of thing, etc., etc. So the current problem, which utilizes what is called the SWIFT network, and effectively money operators in the local market, every time you have an intermediary within that value chain, there is a markup, and effectively it's the end consumer that picks up that fee, that charge. It becomes very problematic at this particular point in time. Even though it does work, it is very slow from a transfer point of view. It's also very expensive for the end consumer because of these multiple intermediaries. Having understand that particular problem, can it be addressed? Yes, it certainly can. If you look at blockchain-type platforms which can transact in close to real time, instead of waiting days, this literally will take a few seconds to get the transaction. It will reduce the transaction fee and reduce the friction in the value chain as a whole. Secondly, it will also reduce the cost for the consumer at the end of the day as well. And that's ultimately what you want to try and get to. Now, I will say this is probably a provocative statement, but it is in the interest of traditional financial institutions to maintain the status quo because it pays for their shareholders. They're commercially driven, so they are profit driven, and that's part of the key aspects at this particular point in time. So the incentive to change at this point in time is not really an encouraging element because the status quo works very well for them. And that is the reason why FinTech, in my view, is a very disruptive, but also a very beneficial aspect in the financial sector for the end consumer specifically that I think we need to embrace going forward. Now, I know that there are initiatives where traditional commercial banks are wanting to partner with FinTech players to get access to a broader market. Maybe just an interesting case study from the Nordic region in Europe. There was a cooperative bank that literally operated for more than 2 centuries. And about 6-7 years ago, they realized that they were losing market share. And what they decided to do was open up the last mile to competition to fintech players in that market. The last mile is access to the end consumer or business. They changed their business model from being a commercial bank to becoming an IT company. They built the infrastructure in the back end to process home loans, to process payments, to process credit card transactions. And instead of utilizing their own internal commercial sales staff, they effectively subcontracted eligible fintech players to provide the last mile to the consumers. And what they found was they were able to get access to more consumers. And over time, the revenues also increased as well. It's a very, very well-known case called Danske Bank. They operate in Norway, Denmark, and in Finland. And you can do the research. I can provide you with the material.
And the UK as well.
And the UK as well.
So that was a very interesting case study where the cooperative bank changed from becoming a bank to becoming an IT company. What we're seeing globally at this point in time is that telcos in particular are also finding their traditional voice and data revenues under pressure. And they're also now looking at fintech operations getting into the financial services space. So in South Africa, we've got a company called MTN that's got presence, I think, in 15, 16 African countries. They've also got a specific business unit that focuses on fintech at this point in time. So we're quite moving into adjacent markets where ICT may be your core business. Revenues under pressure. Fintech has been one of those potential growth areas people are currently looking at. As much as fintech is trying to disrupt financial institutions, and it can be done more effectively or efficiently at this point in time, there are other adjacent players in other market segments, like in the telco space, that is very well renowned, that effectively all to try to get into that space as well. And maybe just one other sort of use case that I can mention is what we call the OTT players, over the top players. So here we're talking about the likes of Facebook, Amazon, Microsoft, every single one of them, including the device manufacturers like Samsung, Huawei, every one of them has got a mobile pay aspect into their business model at this stage. So that I think is very exciting, and it gives opportunities like small players like ourselves potentially also to play in that particular segment. Finance is one of the last core markets being disrupted at this stage. And of course, it's been pretty well protected by legislation regulations, but we are seeing a slow but gradual relaxation of the rigid rules that govern those market segments at this point. It is an exciting time to be in the fintech space at this stage.
Thank you, Troy. It's interesting how they moved from that model into becoming an IT business. We've talked about AI and how you're looking to integrate these technologies in the near future within Trident. But when we're building disruptive technologies across, you have Trident built disruptive technologies across mobile, fiber, internet networks, and in boardrooms today, AI feels both urgent and vague. And where does AI earn the right inside a P&L?
That's a very good question. And let me respond in the following manner. In the late 1980s, 1990s, early 2000s, if you applied for any position, be it middle management, senior management, executive position, on the job specification, there was always a criteria that specified what is your computer literacy skills. In other words, can you utilize Microsoft Word, Microsoft Excel, PowerPoint, even email? That was a basic fundamental requirement going forward. What we are seeing right now in 2024, 2025, is that you need to understand how to utilize artificial intelligence as a tool in business as a whole. And then just clarify that statement. Effectively program or code artificial intelligence to build a new system, utilize those tools through basic prompt engineering to effectively solve a particular business problem. It could be something as basic as, ChatGPT, finding particular services or solutions, or finding perhaps a solution in the marketplace. Although I'll just caution that ChatGPT has been renowned to give what is called hallucinations or false information. So one needs to be very careful how you utilize that. But it's always a guideline to say that whatever information you get from AI, just make sure that it is from an authentic source at this particular point in time. So to your question about how does it impact the P&L, in my view, going forward, every single business leader at a junior management, senior management, executive, even the boardroom level, has to become proficient and competent at utilizing AI tools to run a particular business at this point. And there are various initiatives that I'm aware of, both locally and from the UK. One particular case, there's an organization that has actually termed this term AIification, effectively into getting a qualification in AI, talking about AI literacy at this point in time, and utilizing those tools to actually build that knowledge ultimately going forward. So that effectively has to become a core critical requirement, even ensuring, like in the early 2000s, 80s, 90s, your staff all computer literate. They could also behind a laptop and send an email, to an Excel spreadsheet, write a Word report, etc. They're going to have to be able to utilize AI going forward. If you were not to do that, effectively, and say, no, this is not for us right now, your competition is going to do that. You're going to find yourself in a very, very competitive field. And customers are going to buy from your competition rather from you, ultimately going forward as a whole. So I would just summarize and say that AI in a business is a strategic imperative. And perhaps even go to the point to say that it's almost non-negotiable at this point in time, and that every business, big or small, public or private, has to have an AI ethos framework in their business to effectively guide their business going forward as a whole. Because today information is at a click of a button, and your competition get access to information a lot quicker than you can do. They can make more informed decisions and effectively mainstream the marketplace at this point in time. So AI is a strategic and competitive advantage that every business must harness at this point.
That's absolutely right, Troy. And just my final question here, as someone who've seen how technology evolved in the last years until now, where do you see us going from here in terms of technology?
It's a very interesting question, very, very open-ended question as well. Let me first make the following observation, maybe just 3 critical points on this. Technology will improve, technology will evolve. And I think that is the spur of innovation that we encourage globally at this point. The second key aspect is how we ethically and morally utilize that particular technology. So already emanating from the US, so people, for example, there's already concerns about artificial intelligence effectively being abused and misused for nefarious purposes in a particular market as a whole. So I think that is going to be one of the key challenges that we're going to face as humanity as a whole, is how do we contain those sort of nefarious potential uses of technology. And one could even go to the war scenario as well. Nuclear energy as innovation was very good to supply clean, reliable energy. What we're seeing right now is that there are state actors that utilize this to eliminate neighbors or other countries, which becomes problematic. So I think there will be lots more debate, discussion, probably laws, regulations, that is going to have to justify how technology can be utilized in a very ethical sense, for serving humanity. I think that's going to be the second key point of going as a society and humanity as a whole. And the third key point regarding technology is how do we package the technologies in such a manner that it actually creates a value and benefit for society as a whole. In general terms, in academic terms, and the programs I've done at the Business School in South Africa is all digital transformation. So how do we take artificial intelligence, machine learning, Internet of Things, cloud computing, etc., and package that to solve a particular problem in society as a whole? And we've got a plethora of problems, whether it's climate change, whether it's health crisis, whether it's diseases, whether it's crime as a whole. How do we package those technologies in such a manner that benefits society as a whole? So those will be my sort of, core response to our technology will go. Technology will evolve. Secondly, we need to put an ethical framework on how technology will be consumed and deployed. And already artificial intelligence is becoming problematic as a whole. And then thirdly, how do we, creatively, innovatively, and probably morally put those technologies in a package that effectively suits society and humanity. So those will be my sort of core observations on the aspect of technology.
It's moving very fast in terms of technology in general. I don't recall an time where technology has moved this fast. Am I right to say that statement, Troy?
Yeah, absolutely. It is moving at a neck break speed at this point. And perhaps just my only guidance is don't get caught up in the hype at this point, because you will find it sort of dizzy up to a point. But technology will continue to progress. There's commercial imperatives, there's society imperatives, there's also just moral imperatives in terms of why this technology. So I'm certainly encouraged that innovation, that drive, and pointing. I mean, we don't want to wait, 15 years before you can get access at the flick of a finger at this point in time. If you look at, for example, going back to the first industrial revolution to the point where you started getting electronic computers, it was almost 2 centuries. From the 1960s, 1970s to where we are right now, we're talking about artificial intelligence and computers talking to us. It's less than 20 years. That is second place. Just one interesting data point in the fintech domain I'd like to share with my students. So if one was to look at currencies, fiat currencies, for example, fiat currency is a sovereign currency of a country. So in the UK, it'll be the UK pound, in the US, it'll be the US dollar, South Africa, it'll be the South African rand, etc. Since the 8th century AD up to 2025, there's only been approximately 180 fiat currencies created at this point. By comparison, if one compares that to the cryptocurrency market, a very, very different picture emerges. So if one was to take 2008 as the starting point of Bitcoin blockchain, it's a white paper published by a pseudonymous Satoshi Nakamoto. Nobody knows who this entity today at this point in time is. From 2008 to 2025, as of this morning, there's more than 2.4 million cryptocurrencies and digital tokens currently in operation at this stage, right? So in less than 25 years, we've had 2.4 million alternative ways in which payments can be made in the marketplace. Where in the fiat world, since the last two centuries almost, there's only been 180 of those currencies. So it tells you two things. One, there is an appetite for the market to adapt to alternative payment mechanisms. And secondly, it also sort of broadens the financial inclusion net, but also creates greater wealth just to manage expectations with regards to the cryptocurrency world right now. The important thing is whatever digital token you introduce into a global economy, it's imperative that you're able to get some utility value out of that. So if you've got token X in your wallet, where can you utilize that particular token? Can you buy groceries? Can you pay your rent? That is a critical aspect. And we have something called legal tender. Legal tender means whatever currency you present to a merchant, they are required to accept that as a payment mechanism for whatever good or service you're procuring at this point in time. So in the UK, for example, if you will have a pound, in Europe you'll have the euro, in Japan you'll have the yen. It does not mean that the same thing applies to the digital code at this point. No merchant is required to accept, a Bitcoin on Ethereum or Litecoin, Dogecoin. That becomes the fundamental difference. But the point is this exponential growth in cryptocurrencies, as I've indicated, suggests there's a broader appetite for financial inclusion and effectively giving people access to finance. But secondly, it's also intending to reduce the friction that consumers typically experience in the traditional financial world at this point. I think this will continue to evolve. And at some point in time, there has to be this convergence taking place between the fiat currency and the cryptocurrency world. We are seeing that taking place, particularly in South Africa. We do have a stable coin environment right now that has been authorized by the Central Banking Authority in South Africa. You're going to see that going forward as a whole, because I think central banking authorities realize that this is a technology evolution. They have to embrace that. The regulations and laws, which typically lag, need to catch up so that people can get used to that ultimately getting forward. But the fintech world in particular is, you will see, in my view, a convergence of the fiat world and possibly, very bold statement, perhaps in the next decade or two, an elimination of the fiat world and everything moving into a digital platform where you have programmable money. Interest rates can be set literally on the fly and effectively become a lot more flexible and innovative to customers. So watch the space. I think it'll be quite interesting to see how it evolves, both from a fintech point of view, but also from a central banking point of view.
I have enjoyed the conversation very much. There's more to talk about, obviously. And I would love to have you back when we see how things are evolving, because I think there will be changes very, very soon in this space. Thank you for going beyond the board with us. I'll leave links in the show notes below to find more about Trident and the amazing work that they're doing and what they're establishing in the fintech and edutech space. Thanks for listening to Beyond the Board. See you next time.